the housing market has been in a tough time here, but it seems like prospective home buyers are getting impatient. According to Bank of America's Homebuyer Insights report out today, 62% of them are waiting for rates to fall to buy a home, and that's down from 85% in April. To break down the numbers, Matt Vernon, Bank of America head of consumer lending, here with us. Matt, great to just grab you for a hot second here. We know that home buyers are getting impatient. So what are we seeing in terms of the turnover of people that are saying, you know what, I just got to get out there and see what's available and perhaps put some bids in?
Yeah, hey, I think the stats that you mentioned are eye-opening because it's clearly illustrating that the consumer today that is in the home buying journey at the beginning in many respects is beginning to your point, lose patience with the rate environment, because ultimately that dream of home ownership is alive and well for all the reasons that we've talked about in the past. So they're beginning to enter into it. I think the real important aspect of this, though, is the existing home buyers and ultimately the motivation for them to begin to list their homes as well. And there was some encouraging data in the survey as well there, where homeowners are looking to list their house more specifically than they have in the past. In fact, 50% of home buyers currently, even with low rates, have said that they would sell their home if the house of their dreams came available, or they could move to a more affordable area.
Matt, you mentioned the fact 50% there saying that they would be, I guess, open to moving if their dream home was available. What are some of those other top reasons or other motivating factors that you're seeing for people that maybe have been hesitant to list their house to put it up for sale?
Yeah, I think the survey has told us a few things in addition to finding that dream home. One, job opportunity or relocation. We saw a preponderance of that. We also saw folks that ultimately wanted to move to more affordable areas, be it within the area that they live, or even beginning to move from state to state into the Sunbelt states and other areas to find a more affordable execution. And in some respects, you've got the baby boomer population that's beginning to downsize, which ultimately should provide inventory to those first-time home buyers and others.
Okay, and at the same time, you still have a lot of the new home builders that are trying to kind of backfill for where there has been underproduction. What are we seeing on that new home side and financing options there?
Yeah, we've seen the numbers kind of move around a little bit this year. In September, we saw single-family home starts raise or be adjusted upwards to 759,000, up from 679,000 in April. And then here recently, we've seen it move a little bit less. That said, the permit process is very active, so we do expect sales of new single-family homes and ultimately that development aspect that you're speaking of to continue to increase as we head into 24.
Matt, there's been so much talk about what mortgage rates need to fall to in order to spur some of this activity that maybe we already are starting to see when it comes to the fact that homeowners are a bit more open maybe to putting their house up for sale. The focus that we have been placing on the need for the 30-year fixed mortgage rate to drop to about 6%, somewhere in the 5.5–6% range, in order to see an uptick in inventory. Is that a bit overdone, or do you still see a need for mortgage rates to fall a bit more?
Hey, I think that's an individual decision by all of the prospective homeowners. I think the advice that I've always given in this type of environment is go and buy a home when you're financially ready and a home meets your needs, because ultimately, regardless of the rates, and our survey reinforces this, that rate is sometimes a shorter duration because of the refinance activity that you may have in 12, 16, 18 months. And I think consumers are beginning to see, with recent rates coming down, and then some of the commentary from ourselves and others very publicly, that we expect to see rates to come down as we head into the middle and latter half of next year, is adding confidence that while they may have some short-term challenges from a rate perspective, that those won't have a long duration to them, and they can capitalize on refinance activity in the future.
All right, Matt, thanks so much for joining us here. Matt Vernon, Bank of America's head of consumer lending. Thanks.